Sajid is joining us with the management, Yashpal Sharma and CMD, and Himanshu Chhabra, who's the CFO of Skyways Air Services, to understand the roadmap ahead. Let's listen into what they had to say.
Skyways, which has been working over the last 4 decades, is today present in 30 plus cities in India, and we are also present in 11 countries outside of India. Our business landscape currently consists of air cargo, ocean, express, trucking, and other multimodal logistics solutions like warehousing, cold chain solutions. We have been servicing customers around the world and offering them services through our technology platforms and our offices across the globe.
Himanshu, you're raising around 582 crores, including a fresh of equity of 399 crores. Give us a sense of the deployment of these funds.
Yeah, so 216 crores of the total fundraise out of the fresh portion goes towards the debt reduction, and 130 crores out of the proceeds is going to be utilized towards the working capital needs of the company going forward.
And give us a sense of the kind of borrowing that you have or the debt that you have now, and post the clearance of this debt, how much will it come down to?
So as of now, the gross debt at the consolidated level is 620 crores, and with the reduction by 216, it will come down to around 400 crores, and the incremental working capital also will help in the reduction of the debt for the next 1 year. And as the operations scale up further, these incremental funds will be deployed towards the incremental working capital requirements of the company.
Mr. Sharma, give us a sense of the kind of growth that you see in your business. How dependent, because you are involved in every shipment that goes out of the country, and you're one of the leading players there. What kind of impact have you seen in Q1, especially after the West Asia crisis?
So Skyways is the largest air cargo company of India for the air export part of the business. We have been the #1 player for a few years now, and we have a 5.64% market share. What Skyways has managed to build over the years is a lot of global contracts with a lot of airlines and shipping lines, and which helps us to pivot our business amongst different carriers in case there is a challenge. So when there was a capacity constraint through the Middle East war, we were able to pivot into other carrier partners and move our business across through them. So we have very successfully navigated this challenging phase and been able to utilize the space that we have, the capacities that we have with carriers from other regions, and deployed the businesses of our customers through those lanes, and which has resulted in absolutely no negative impact on our business in this phase. And we continue to go forward and meet the demands of the global trade through the solutions that we have.
Give us a sense of the kind of revenue or revenue model that you have. You are helping in forwarding all the shipments across, whether on air, through air or ocean. What kind of revenue that you get for every shipment that you do? Is it based on tonnage, or is it based on every shipment?
So in the air cargo business, everything is based on per kilo basis. The carriers charge on a per kilo basis the freight cost and the fuel surcharge, etc. And the same is paid by the customer as well. On the ocean side, the revenue calculation happens per container, so which is divided into 20 equivalent unit, which is known as TUs. And the same, the carrier charges us in the TU basis, and we charge the customers also on the TU basis. This is for the full container load. Also, some of the businesses in ocean move on the LCL part, so less than container load business, where it is calculated on per CBM basis. So the calculations which are done by the carrier to calculate the loads is the same equivalent unit what we charge the customers.
Okay, and how is what kind of pricing power that you have in this? Is it a very competitive business in that sense, or are you able to raise prices as as there are multiple inflationary points that come in?
So Skyways has grown over the years, and like I had mentioned, that we've signed a lot of global contracts with some of the airline and shipping line partners, which helps us to keep those capacities with us. And the carrier partners also reciprocate with us in terms of offering us the best possible price bands for their business, and we are able to become an extended arm to them in the whole market, and are able to reach out to the customers, offer the best possible pricing that is there. The space is a fragmented space. Like I said, we are a 5.64% market share in the air cargo business, and being the number one player. So it is a fragmented space. So the business is always going to be competitive, but Skyways with our global contracts is always able to leverage those contracts and get the best in market pricing for our customers.